Were you aware that Tesla may well possibly be worth $40,000 per share by 2030? Although this is just a prediction, it is worth finding out why Tesla was given such a high price tag. Make sure to stay tuned and keep watching to find out. Tesla valuations are becoming more and more mind-boggling. It might just be possible that owning the company's stock will no longer be achievable to the average American. As of today, Tesla is almost becoming a household name, with a lot of people wanting to own their own electric vehicle. In today's video, you will see why Tesla is predicted to cost $40,000 per share by 2030. Tesla, a clean energy company, has been leading in the EV market. Given the current economy, with threats of inflation and global recession fleeting around, investors are extremely concerned about the future of their investments, even in large corporations, including Tesla. Still, many remain bullish on the company's stock as it has both the ability and the potential to perform well in the future, despite numerous roadblocks. That said, most raise their respective valuations of the Tesla stock. In January 2022, a Wall Street analyst at Goldman Sachs, Mark Delaney, increased his price target for Tesla stock from $1,125 to $1,200 while maintaining a buy rating. He also named Tesla a top pick for 2022 and called it the best idea in the EV sector. He further stated that Tesla holds the leading place in EVs. According to Cathie Wood, CEO and CIO of investment firm ARK Invest, Tesla is on the battery front about 3 to 4 years ahead of Lucid and Rivian, electric vehicle automaker and manufacturer companies. In fact, Wood said that Tesla is ahead of most anyone else. She said that this is because Tesla became very creative in the battery space, especially when they introduced silicon into anodes and experimented with ultracapacitors. For these reasons, Wood believes that Tesla is ahead of the game by 3 to 4 years. Morgan Stanley's Adam Jonas compared the current landscape for EVs to a race where Tesla has been winning so far. He compared the EV industry to a marathon and said that Tesla leads at mile 21 while other companies are still at mile 2, while others are still tying their shoes. He supported this claim by explaining that the recent records of car deliveries are proof that Tesla's position remains strong and is becoming stronger as the marathon progresses. Like other investors, he also revised the price target for the automaker shares to $1,300 from $1,200, and proceeded to predict that the delivery figures would reach 2 million this year. Mark Delaney, a Goldman Sachs analyst, said that he raised his price target from $1,125 to $1,200. He also placed Tesla stock in the outperform category as well as called it the best idea in the electric vehicle sector. An American independent investment bank and financial services company called Piper Sandler Companies raised its price target for Tesla to $1,350 in February. This implies that buyers can expect as much as a 55% gain on the company's share, updating its valuation to account for new deliveries, CapEx, and margins. Piper said that it expects Tesla to generate more cash since the stock has potentially more worth. Tesla is a clean energy firm that will possibly overpower the fossil fuel industry, which will eventually allow Tesla stock to outperform, allowing a much bigger opportunity to make its way up to $10,000, according to Chamath Palihapitiya. Chamath Palihapitiya is a Sri Lankan-born Canadian and American venture capitalist, engineer, SPAC sponsor, founder, and CEO of Social Capital, and was described by CNBC as the founder and CEO of Social Capital, whose mission is to advance humanity by solving the world's hardest problems. He said that the Tesla stock has a bright future and will be worth double and even quadruple in the years to come. ARK Investment Management, LLC, an American investment management firm based in St. Petersburg, Florida, that manages several actively managed exchange-traded funds, updated Tesla's valuation model with a $4,600 price target in the best-case scenario for Tesla stock in 2026 and up to more than $20,000 by 2030. ARK's updated open-source Tesla model yields an expected value per share of $4,600 in 2026. The bull and bear cases, tuned to the 75th and 25th percentile Monte Carlo outcomes respectively, are approximately $5,800 and $2,900 per share. ARK Invest was founded and is managed by Cathie Wood, an American investor who is often called the most underrated investor in the game, since she is incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. Wood shared in an interview that her base case on Tesla is around $3,000 a share, and continued to say that their estimate for Tesla's success has gone up. She explained that this is due to their market share that went up dramatically instead of going down despite other companies' ventures into the electric vehicle industry. ARK Invest believes that Tesla will be able to produce at least 5 million to 10 million vehicles as early as the year 2025. An email obtained from Tesla employees by Electrek, an American news website dedicated to electric transportation and sustainable energy, stated that Tesla will eventually be able to deliver a fully autonomous ride-hailing network which will be termed as Tesla Network that will bring a lot of money as well as a high margin. Musk, through an email to his employees, said that he agrees with ARK Invest's $3,000 price target if the company executes well, and further stated that a $3,000 share price will make Tesla's valuation at around $3 trillion, making it the world's most valuable company. As of today, Tesla is hailed as the world's most valuable automotive company, with over $730 billion worth. Dave Lee, a known YouTube content creator whose channel tackles all there is to know in investing, believes that Tesla stock has the potential to go higher, perhaps or hopefully 100x more in another 8 years. This is after his company stock expanded 100x within 8 years of holding common stock. He shared that when he originally bought Tesla stock, he expected it to expand 10x from $3 billion to $40 billion in market capitalization. In fact, Ronald Stephen Barron, an American mutual fund manager, investor, and founder of an investment management firm called Barron Capital, said that Tesla comfortably surpassed Wall Street's expectations of $2.20 to $2.30 per share and $18 billion in revenue. Do you think these valuations of Tesla stock are reasonable? Share your thoughts in the comments section below. Tesla's operating profit was about $1 billion greater than what analysts expected it to be. This resulted in Tesla shares increasing by 5% in after-hours trading to $1,017 per share, which is a significant increase from around $976 per share at the close. This is perhaps one of the reasons why Warren Redlich shares the same vision with other investors with regard to Tesla's future success. In fact, he took a step further from other investors and said that the company's stock may be worth $40,000 a share by 2030. Warren Redlich is a graduate of Rice University, Stanford University, and Albany Law School, who retired after 26 years as a criminal defense and personal injury lawyer. In 2019, Warren began making videos about SpaceX, Tesla, and other related topics. His Twitter, with which Elon Musk has replied 8 times on Twitter, has 26,000 followers. Warren is prominent in the Tesla community as a super bull. Warren is also developing a single-passenger electric vehicle designed for self-driving robotaxi use in poor countries as a sideline. While other analysts and investors shared their thoughts as to why Tesla has been leading in the EV market, Redlich also shared his 2 cents. He explained that Tesla is so far ahead of other companies building electric vehicles, partly because of their making full self-driving FSD almost ready for general distribution. He then gave the battery revenue model to demonstrate the amazing future value of Tesla, and accordingly, the price of their stock. According to the said model, $30,000 car, 50 kilowatt-hour battery pack, $600 kilowatt-hour revenue, $600 million per gigawatt hour. At 1 Tesla watt-hour, Tesla does $600 billion in revenue. Aiming for 6 terawatt-hours in 2030, that is over $3 trillion in revenue. With a price-sales ratio of 5, that's a $15 trillion market cap. It's by calculation that the share price of Tesla stock is headed toward or becomes more than $10,000 per share based on the current price and not including any possible share price splits, while others raised questions such as, what happens when Ford, GM, and VW produce electric vehicles? Warren simply dismissed them as true competition because they are so far behind Tesla FSD. Although these predictions and speculations of renowned investors and analysts in the financial industry are the fruit of their respective exhaustive studies, you should still conduct your observations and thorough study before making a sound decision. Investing in stocks is a risk in and of itself, since the stock market is quite unpredictable, which is why these are suggested for you to do. Make sure to visit our channel and watch our other videos for more Tesla stock content.